called for narrower than expected margins, some slowing in revenue that had just been growing gangbusters and by a lot of measures still is. Joining us now in a CNBC exclusive, Snowflake CEO Frank Slootman. Frank, welcome. So, I mean, you've been growing 100+% year over year, still at about, what, 85, but, you know, some concerns about consumption. Tell me, what exactly are you seeing with certain customers, consumer-facing internet companies that consumed less in the quarter than you expected, and what does that mean for the rest of the year?
Yeah, consumption is still doing incredibly well, and you look at our guidance, both for the quarter, for the year, as well as the 10-year guidance we give. We have extraordinary confidence that that's going great. The thing that people are coming to terms with, that this is not a SaaS, ratable revenue recognition model. I mean, we're recognized on the basis what customers are actually consuming during the period. They're still under contract. In that sense, it's exactly the same as with a SaaS model, that every single dollar that is under contract, will end up being recognized as revenue. But from day to day, from week to week, from month to month, that can vary in terms of whatever is happening specifically with that particular customer. Maybe people are on vacation, maybe they have a change in priorities on projects. Any number of things that can cause a surprise for us in consumption. But over the contract term, all of that will land as revenue. And people are trying to see it as macro related. We really have zero reason to assume that it is macro related. In many instances, we actually know that it isn't.
It's not macro related. Well, tell me what you mean by that, because my interpretation, apparently incorrect, of what you were saying, these consumer-facing names were perhaps consuming less because, hey, the Fed's trying to get the economy slower, maybe inflation is higher, people are buying fewer units, that there is some macro impact there. So in what way is the macroeconomic situation not what's causing this?
Well, we're not at liberty to divulge exactly, what people's internal, reasons are. But, one of the things that is very common, with customers is that they go through growth cycles followed by an optimization, phase, and then another growth cycle. So there's an ebb and flow to it that can show up, at times, unexpectedly. I mean, because we guide on the basis of historical data, because that's all we got to go on. Sometimes we have insights specifically from the account teams as well that we will weigh into it. But there's any number of factors, that can cause. Sometimes the aperture is just too narrow for people to try to drive conclusions from that kind of data, because we saw some weakness as we reported in April, but then, in May so far, things have been very, very strong. And again, the aperture is too narrow to drive big conclusions from it. And we can only see what we can see.
Okay. And so that is why you are not pumping the brakes on cost to the degree that some competitors are. I mean, my understanding is that you're continuing to add to headcount because your sense is that the model is working, that this is not a macro impact that you're seeing. Are you putting measures in place that will allow you to hit the brakes if this develops in a way, the data changes? And did I characterize what you're doing with costs correctly?
Yeah, I think you have. I mean, we have an extremely high growth business at scale with, with high cash flow generation, improving unit economics, operating efficiency and profitability. Everything is going great. So, I see no reason to hold back. I'll end up regretting that later on. Now, that said, we literally observe revenue on a daily basis. That's very different from other companies. We can see what our revenue is on a daily basis. So we have a very refined grasp on exactly how our business is developing day to day, week to week, month to month. And we can adjust if we need to. This so far, we have not seen the need for it. We have a business that we want to invest in because it's yielding tremendously.
Hey, Frank, I think that's interesting. I wonder what you make of some of this newfound cost discipline in the VC world, and whether or not are they overdoing it there? And then I notice on M&A, you say there could be some interesting opportunities, maybe not huge, but that's something you're not completely discounting.
Unfortunately, I've been around a long time, and I've been through, more than one of these cycles before. And every single time, the VCs send out this end of days message, batten down the hatches, And 6 months later, they've forgotten. It's distant memory. So you got to take that stuff with a grain of salt. People are over rotate on the plus, and they over rotate on the minus. And I just don't think that's all that helpful.
So what are you doing when it comes to employee compensation, to morale? Now, you and I have talked before about your approach to who you get in the door in the first place and how motivated you want them to be. No pats on the back, but clearly some people's expectations on compensation, which tends to be tied to the stock price, have had to shift. So how are you positioning around that? What are you tweaking to keep productivity high?
Yeah, so we the real issue there is not that stock prices go up and stock prices go down. I mean, we don't ask for stock back when the stock goes up either, right? So that's just part of life. What is very, very real is that people that hire on at lower stock prices versus people that hire on at the peaks, that becomes an inequity that we feel we have to deal with, and we've communicated to all our employees in our all-hands meeting yesterday actually that, hey, we're not oblivious to it, and we are going to take a very detailed, specific look, and we're gonna bring that along in our annual equity adjustments that we're making. So we're not going to let talent walk out the doors. They're very hard-fought people. They're super important to us. We were doing incredibly well on dilution when the stock prices are sky high, and obviously you're going to have to pay up a little bit when the stock prices are down, and we're prepared to do it.
Okay, so sounds like you continue to take the long view. So as you do that, talk to me about these large customers and the momentum that you're seeing there. What are the hills that, even as the market in general, perhaps some competitors are getting a bit timid, what are the hills that you want to take?
I mean, we're very broadly, invested, not just in every geography, but also in every industry. So we touch everything. What's really interesting about our business, the way it's developing, is that we're becoming very what we call mission aligned with our customers, meaning that we have CEOs from hospitals reaching out to us, and they say, look, we have a ton of data. We know there are insights in there that can add to people's longevity and quality of life, save people's lives, and that's what we want to do. But there's a huge gap between having all that data and envisioning the outcomes that you want, and that's where we're going to insert ourselves, to help people realize those kinds of outcomes. And it's very exciting because not just in healthcare, but it's in every industry. It's in advertising, it's in retail, it's in manufacturing. And those conversations really dominate our reality right now. It's no longer, moving, legacy on-premise workloads to the cloud and all that sort of thing. Yes, we're continuing to do that, but the conversation is very much shifted towards industry-specific challenges and what data can do to them to enhance and further their missions.
Is the competition and cooperation with the hyperscalers, AWS, Azure, Google Cloud, has that dynamic shifted in this environment at all? The competition as well as the cooperation and how they operate in the ecosystem?
Well, I think those relationships have all incrementally become better, over the last 3 years that I've been here. I would not say that sort of the dislocation that the world is experiencing right now is changing that one way or to the other. We're actually quite pleased how those relationships are developing. They're really maturing, and they're more grown up and more reasoned and less aggressive and less reactive than it used to be in the early days.
Okay. And finally, on net revenue retention, you're still there in the 170s. How do you expect that to trend, even as these meteoric growth rates doubling year over year maybe comes in a bit? What do you expect to happen on net revenue retention? And is that an area that you're pointing investors to watch for the health of the company?
Yeah, it always gets talked about in our earnings announcement, and we said that we believe that it will stay north of 130 for a very long time to come. It will come down over time. That's just gravity. But one of the things to understand about these exceedingly large net revenue retention rate, that is driven by the consumption model, right? Because there's really no lid, if you will, on our ability to grow, because customers can consume at will. There's unlimited capacity and infrastructure available for them to do it. So as some sell-side people have maligned the consumption model, it actually is the explanation why we have such tremendous growth and why we have such great net revenue retention rates.
All right. Certainly a positive tone. For now, the stock's gone green. Frank Slootman, CEO of Snowflake. Thank you.
Thank you.